I think we are now charged enough to move into one of the most challenging but also fascinating topics related to crypto and digital assets. I think we are ready also for the next slide, because we will be having a next panel moderated by Mariana de la Roche-Wills, CEO and founder of BlackVogel. And the panel will have practitioners from different parts of this ecosystem, so blockchain analytics, trade surveillance, crypto compliance. So I'm happy to introduce you to Gunay, Faruk, Ozer, country manager for Turkey and Central Asia at Chainalysis, one of the companies that have been mentioned already several times today. Igor, Prizant, senior advisor at Solidus Labs, and Pavlova, co-founder and CEO of ChainComply, and Goran, Safar, VP of Growth at Global Ledger. Please take your seats and enjoy the panel.
Well, that's to make people more awake and paying attention. Hi everyone, thank you for joining us today. My name is Mariana Roche. I'm the founder of BlackVogel, which is a Web3 consultant. So we have been helping projects across different regions to understand regulation, but we have also worked with the regulators in different regions to see how they can generate the regimes, but also what is the impact of the different regulatory frameworks on the industry itself. Today, we're going to discuss with 4 amazing panelists one particular topic regarding the fight for money laundering and financial of terrorism. But first, I'm going to ask each of you to maybe introduce yourself. Do not give me the full CV, just like highlight what is like your current role and why are you here discussing these topics.
Yep. Thank you, first of all. I am very happy to be here, and for that reason to everyone, especially the National Bank and also the whole organizer and the people, I would like to thank a lot related to this topic. I'm at the moment the country manager for Turkey and Central Asia. I've been at Chainalysis for the last 1.5 years, almost that, but on the other hand, I've been in this professional life more than 25 years, especially on the technology side in different industries, but mainly developing the technology part. And one of the key things is for today, as you know, the Chainalysis is providing the blockchain analytic tools and the platforms and so on. It's highly important for fraud, scams, and illicit activities, how these blockchain analytic tools are supporting. Thank you.
Hello, everybody. Thank you for having me. So my name is Goran Safar. I'm the VP of the Growth for Global Ledger, which is similar solution as my colleague from Chainalysis. Currently in the position. Prior to that, I was in other companies for later discussion. But yeah, happy to support, happy to discuss any topics and to see how I can bring my contribution to this discussion. Thank you.
Afternoon, I'm Pavlina. I run ChainComply, a crypto compliance platform with a focus on source of wealth.
Good afternoon. Igor, Prizant, Solidus Labs. Solidus Labs, we have a number of market offerings. The first market offering is focused on trade surveillance, monitoring for market abuse. Next one is focused on transaction monitoring, focused on AML, and the next one focused on ecosystem monitoring, which is smart contracts, tokenization, and so forth. We also have a growing business focusing on insider trading for the betting platform, or polite way, prediction platforms such as Culture. Great to be here.
Thank you. So let's get into it. So we heard a little bit at the beginning what is the current landscape here in Kazakhstan. I think that one thing that was clear for all of us is that, first of all, the regulator is really friendly, it seems to. They are like really open to talk. Like I have never seen like such a open approach to the industry. Yeah, like confident I can say, like I have not seen that. The second thing that I heard is that the adoption level just like grow exponentially, right? Like in like less than 3 years, they went from like 500 to 500,000 to 7 million. I think that was the number that they gave at the beginning. So when we have like this grow, like from 1 second to another, there's a lot of things that comes with it, right? Like, first of all, we might have some supervisor authorities that are not prepared or trained to just like deal with the level of data that is going to be produced. I think that was also, Magnus was talking about like accounting, but accounting is not the same when you have like this amount of data, right? So there's like some complexities there that you need like to prepare for it. And the other thing is that we also know that bad actors are always waiting for the opportunity, and they take advantage of new markets with like tons of unprepared users. So let's start not for like the type of like criminal types that we have seen, because we will talk about that later, but I want to talk more about the structural features that we should be paying attention. So I'm going to start with you, Faruk. So when the data that you have on change, and like in particular, like looking at this region, what do you see that you wouldn't see in more developed markets?
It's also possible to say that one, the developing and the developed markets, one is a young market and the other one is a mature market. Especially when we are taking a look to the mature markets, it's that you are seeing a lot of players in the market. Some of those the exchanges, and some of those are the service providers, DeFi, and of course on the regulatory and the law enforcement part as well. There are many different actors and the players in the mature market. On the other hand, when you are taking a look to the young market, there are less intermediaries, there are less entities or the organizations in this part. This is an advantage to take away and to also follow the other mature markets and the countries or the regions. And also this is an advantage, especially when we are taking a look from the regulatory or the law enforcement bodies, focusing on only some small areas. But on the other hand, it's possible to say it's very fragile for these few entities within the young market. The other point is, especially when we are taking a look to the mature markets, there is a balance between stable coins, Ethereum, Bitcoin, and etc. But for the young markets that we are saying, of course, by the way, the stable coins is rising a lot at the moment all around the world. When we are taking to hold the transaction numbers and the volumes, that's right. But still, for the mature markets, there is a sort of balance. On the other hand, for these new markets, stable coin is leading the market-wise. And the other thing is related to the young markets, it's the velocity. Everything and the transactions are running too fast. On-ramp and off-ramp is just doing very quickly. And the wallets are just creating and then the ending very quickly as well. This means still running everything on the transactions and very quickly, very fastly. This is a disadvantageous, especially for the regulatory bodies for monitoring and following these transactions and the actions. The critical point may be for the regulators to take into account this part, but this is a little bit the nature of the young markets for developing or for being mature in a while. First of all, they are starting very quickly, then they are settling the time for the investment for a longer while, and etc., something like this.
I will argue that that happens also in mature markets, right? Like the issue is like infrastructure when you are like doing the regulatory regime at the same time that adoption is like piling up. But I will agree. I want to turn a little bit more into you, Igor, but like from another perspective. So let's talk a little bit about market manipulation.
Yeah.
So what are like the first type of market manipulation that you start to see in your markets, and why is that the first one?
Mm-hmm. And that's I was actually thinking when I was listening to you, Faruk. So when we think about the young market, right? What are the key attributes of the young market, right? It's likely, right? Low liquidity and high concentration of players. So what it means that it creates an opportunity for manipulation without actually involving a lot of capital. Because of the low liquidity, you can affect order flow you can go with the wash trading without investing massive capital, something that it would be impossible within the traditional finance, right? And then the second part, because you don't have that many market participants, the opportunity for collusion becomes very apparent. So what happens when you start thinking about the actual market manipulation patterns for the young market? Unfortunately, you have exposure to all 3, 4, 5 different types of. So you can do the volume-based manipulation, and that allows you to do the wash trading. You can do price-based manipulation, which is pump and dump. You can do order flow manipulation, which is spoofing and layering. So the keys for the young market trying to understand exactly what are the attributes of the players. I don't want to go too long. I'd like to talk about like how would you think about what makes one market participant different from another market participant, which is I think key for the young markets. But we probably can talk about it later in the discussion.
Okay, so we have like here like some of the complexities at the compliance level, at the level of like understanding like all the data that is produced. We also have like the market manipulation, but there is another like weak point that can be easily exploited, and that is the relationship between the crypto exchange and digital assets providers with the banks. Can you talk us a little bit about that, like Pavlina, if that's...
Yes, sure, and maybe if I could just add a bit to what Gunay was saying earlier. So actually, according to a recent study of Chainalysis, more than 62% of all illicit flows go through crypto exchanges. So I don't mean to point any fingers, but indeed it is very important as part of any due diligence or compliance process that financial institutions are aware and consumers are aware that at the moment the majority of crimes actually happen through crypto exchanges. Whether they used as mixers or in different ways, it is important for us, coming back to the data topic, to really understand what happened on those exchanges.
I will quickly jump here and then just like ask you, what then are like those structural challenges that make a young market so prompt for like all of these things that we just heard, and what can we do? Or like what will be like the solution at the compliance level there?
Well, I think everybody is already doing it. We're just not talking about it. It's about KYC, right? Because blockchain is transparent. The people behind that wallet or transaction, they are not. Now, exchanges do try to implement KYC. They try to collect the data. They try to implement travel lure, all these things, right? But in the essence, criminals work in certain patterns, right? They work based on certain behavior and the way how they operate. Not everybody can do mixers. Not everybody can do cross chains. Not everybody knows how to smurf. So I believe the exchanges will need to adopt more into behavioral, right? They're going to need to implement better education for the people or for the compliance officer to understand behavior of certain individuals who is operating on that exchange. For example, if he suddenly receives 250 bitcoins and then he suddenly disperses them, it should be a red flag example. So I think this is one of the things they will need to do. Everybody is going to have to look at it.
Not to disagree with the fellow panelists, but come to think about it, the KYC is just one leg of a stool. Because in reality, so I think the number that you mentioned, 61%, the last time I look, 85% of the transactions are going through the centralized exchanges. Centralized exchanges are the ones who are subject to regulation, so imposing certain KYC that's fully within the remit of the regulators, right? What's left for interpretation is the second leg, which is, companies such as ours come into play, which is market abuse. Even once you know your clients, right, it's important for you to monitor their behavior amongst themselves and with the market, because that's where the most of the manipulation coming in. I don't want to diminish the value of KYC. I don't want to diminish the value of anti-money laundering, but keep in mind this is just one side of the coin.
Oh, I just love this because now I'm going to play devil's advocate here. Because we are like talking about like the level of exchanges, right? Like, of course, this is where most of the transactions are going to end because this is the touch point with the real economy. But I will also argue that bad players do not KYC. So this is like one of the measures that I will argue with you that is the weakest point of AML, that we intend to impose rules to the bad players that we are expecting the good players to comply, while putting a lot of like compliance effort at the level of like the centralized players. But we also have a lot of like DeFi protocols and self-hosted wallets that are operating that like maybe they account for the 20% that are not touching there, but like how much is the percentage of the 20% that is connected to money laundering? I'm gonna go back to you. Yes, like I can see that you want to talk, but like I want to go back here with one question, if you don't mind, because like I would like to for everyone to understand, because you talk about patterns, and I will agree like that there is always a behavior that we can start recognizing. What is that behavior, and what is like the most common way that is used by bad players and bad actors to do money laundering, especially in John markets like this one?
Well, what we see the most is actually, I would say, like colleague mentioned, it's smurfing and structuring.
Maybe describe a little bit for those that do not know what it is.
So structuring is that you try to collect, you actually, I would say, bring all the value of all the transaction and all the coins and all the assets to one place, and you're trying to disperse it to multiple places. And the same goes for smurfing. You try to bring and then disperse it in multiple, I would say, chains or the ways how to operate. But going back from the behavior, and I do agree, I think KYC is one layer, KYT behavioral is second one, and then everything else is then the third one. So I think we are actually tapping into the field which nobody else fully understands how to work with it. We have regulations to guide us, but we do not have full comprehension how to manage it once it comes to that situation or when something is happening in the full way.
And I will jump directly to you, Pavlina. What are like the red flags when we are like talking at the banking level and we are like looking to source of wealth that like will interact with like the recognition of patterns and what was mentioned right now? What are like those things that we see and we say like, this we need to further investigate, and I'm going to send it to Igor.
In fact, because I think Igor might be better positioned to talk about this, but the red flags really come from the transaction monitoring system, right? Now, there's an issue with the current financial ecosystem at the moment that the transaction monitoring systems cannot always detect that fiat transfer is, for example, from a crypto exchange. And that has to do with a lot of other issues in there, but for example, payments going through payment companies from a crypto exchange through some kind of a payment company and then to a traditional financial institution. So the flags are not always there, first of all, in the transaction monitoring system, and then once the flag is there actually, what we need to understand is really what's behind it. So financial institutions nowadays are increasingly asked not just to monitor transactions, but also to understand what's behind those transactions. And that would require a bank to actually analyze data that is outside of their financial institution. That is fragmented data that comes from crypto exchanges, wallets, DeFi protocols, and then this comes back actually to the KYT topic that was just brought up, because the only way really to understand whether this wealth there is legitimate is by understanding the client's holistic transactional story, or to try to make a profile of that customer, for example, by understanding and analyzing their data.
All right, so first let me just be very clear that I'm in your camp, guys. KYT is important. And also it's actually quite important for the young exchanges, because remember one of the things that I mentioned earlier, the exposure to the wash trading. And on its very fundamental level, wash trading for the young exchange can be done fairly cheaply, right? All I need to have is to have 2 accounts, and I can start creating volume. Because of the challenges with KYT, sometimes it becomes challenging to establish ultimate beneficial owner. So that will be the very first foundation. Once you start building that KYT database and you start knowing your ultimate beneficial owners, then you can start peeling down on the manipulation patterns, such as, for example, wash trading, especially when it's self-dealing.
But none of this is new, right? Like we have like those that have been operating at the different regions, we have seen this coming over and over and over, and regulators are struggling to adapt. I want to maybe just like ask, because I think comparison sometimes is good, but another like market that came out that fast was Turkey, where you operate. So is there any lessons learned that you saw that that if the regulator will have known, it will have been better, so the Kazakhstan regulator can learn from like past mistakes of other regulators?
For sure, especially nowadays, and especially for the last 1-2 years, there is a huge progress in Turkey. From the regulatory part and the regulatory organizations. One is the Turkish FIU, it's MASAK, and the other one is the regulatory body, it's the Capital Markets Board of Turkey. One thing is when we are taking a look, similarities or some differences between this region, Kazakhstan and the Turkey, especially for Turkey, the market is running in advance. What I am trying to say, for the last 10 or 15 years, already the exchanges are there, already existing, and always there is a kind of interest for the crypto, especially from the young generation, from the young people. And this is the similarities with Kazakhstan as well. We have a young generation, and this generation is digital native generation. For that reason, their interest is very high in these countries, in these regions, and etc. Just the thing is, the regulations in Turkey are coming a little bit, how can I say that one, behind. For that reason, the market is taking the position in advance, but the regulations are just coming after those. It's a little bit different, that seems at the moment for Kazakhstan. It's the good thing. And while the market is progressing and developing, and also the regulations are coming in parallel. That's one of the most important part in this wise. The other one is, especially for Kazakhstan, the mining. Turkey has no mining in the future. For that reason, not an experience even in the market and even on the regulatory part related to the mining and other things. So this is a little bit differentiator for Kazakhstan. And in mining, it's the good thing. It doesn't mean if we are especially taking the illicit activities and the part of things, mining doesn't mean anything for those, but at the end, for monitoring the coins or the tokens and etc. and the crypto after mine it. It's the most important part. For that reason, the blockchain analytic tools are existing after the mining and after the tokenization and other things and etc. for monitoring the activities within these ways. And by the way, I would like to add one thing, that we are talking KYC, KYT, and the other thing is the travel rule. All these parts are complementary to each other in reality for just making a secure crypto environment, that part.
I will say that like another advantage that, first of all, I would like to again disagree a little bit, because I think that in all cases, the industry moves faster than the regulation. And I think that we have seen that in every jurisdiction, and it's mostly because the speed of innovation and technology versus bureaucratic processes at the government level, it's just, we cannot compare, right? But we accommodate. I think here, what I liked so much about the first panel was that they were really discussing how to implement crypto and digital assets as part of the economy, right? And I think that this is a different mindset that gives them an advantage over some of the jurisdictions that I have seen. And I want to actually turn to you, Igor, because with that comparison, I would like to discuss a little bit Europe and the US, right? Because they also pool jurisdictions right now, and they have way different processes and backgrounds on how they did this. For those that are not familiar, part of the inspiration of MiCAR was the stablecoin that Facebook at the time, now Meta, they wanted to launch. So this, although we were discussing it a little bit, this has speed up really hard how fast we publish MiCAR, right? So you have been working on those markets. Yep. So can you walk us a little bit through how market manipulation and AML has been perceived there?
Mm-hmm. Well, thank you for pointing this question to me, because I'm, so as you know, right, so MiCAR regulation, well, it's a pan-European regulation focusing on crypto assets, and it's being governed by ESMA. So ESMA is relying on our technology to conduct MiCAR surveillance. So Solidus Labs conducts all MiCAR surveillance for European Union. So I had a front seat chance to work with ESMA over the last year, and now we're working with all of the 30 national regulators and 175, the last time I counted, of licensed CASPs But if I may, I just want to maybe to think for a second about what happens when the regulations such as MiCA and the discussions that we had, you know, chicken and egg, right? You have the regulation, but you also have market participants. So what happens when the, you know, the gaps between the regulation and actual execution? Because I'm in trenches. I'm in trenches with CASPs, I'm in trenches with the national regulators, and we all need to operate within the MiCA guidelines. The challenge is that the regulation, you know, some people argue how clear it is or how opaque it is, but at least the regulation tells you what needs to be monitored. Regulation doesn't tell you how to monitor those things. And that creates a massive gap between the expectations from the regulations versus data that's available to actually exercise this monitoring. To do real meaningful monitoring, you need to be able to capture both trade information as well as order information, right? Because you have different market manipulation patterns focus on trade and focus on orders, especially when you're thinking about the trades done through the centralized exchanges. Centralized exchanges, especially the one that focused on crypto, are not necessarily equipped to be able to capture data in the details that will allow detailed surveillance, detailed monitoring. So thinking about the order, right, for me to be able to really make a case for spoofing or layering, I need to be able to capture all order life cycle, right, from the order placement to cancellations, to rejections, to amendments. We able to process the time difference with nanoseconds because it's very important for me to see the sequencing. Well, not many exchanges are able to capture it nanoseconds. They don't need it to place the trades. So there's a lot of discussions coming back to your initial questions. There's a lot of discussions happening between the regulation as it's written and then interpretation of the regulation and then actual execution of the regulation just because of the data cleanliness and data availability. And I'm fairly certain that similar challenges happening now with the United States market as it's happening with ESMA. Again, ESMA in this instance is a trailblazer, so a lot of lessons learned that we are picking up working through the pan-European market we're applying to our US-based clients.
I actually think that ESMA is one of the bodies that have bring like some type of clarity, right? Because we have the regulation from the Commission that passed the European process. We are not going to enter here, but ESMA and EVA were the ones in charge of doing like this second level regulation that we call that is like more at the level of the detail. So I will agree with you, and I will also like say that between the level of the regulation to the level of the interpretation to actually do it to the enforcement of that regulation, there is another big gap, right? Which is where most of these topics just get into light on how we actually implement it, and like all of you work with like intelligence tools that actually facilitates this. I wanted to go back to something that I just remember from the third panel also, and was like about coordination between different kind of like regimes, right? Because Kazakhstan has like now 2, but almost 3. With the one that entered in force 1 month ago, right? Like, so it's not 2, it's just 3 now coming into play. We have seen a little bit with the UAE what has happened and how some bad players have taken advantage of like this interception between jurisdictions. Like, what do you think, maybe if I can turn to you on this topic, what do you see that are the weak points where we have in one country different frameworks coming into place?
Well, in generally, when you have different, I would say, regulators or different frameworks, then there's going to be gaps what you are looking for or what is required, right? I think Kazakhstan has overcome this, right? So I remember 2 years ago, I was only talking to AFSA, so there was no other regulator, right? There was a discussion about CBDCs, but nothing else. Now we are here, like what, 3 years ago, 3 years later or 2 years later. Now they're doing. As they mentioned before, our both colleagues, they are not separated as a regulator, they're complementing, right? You can do National Bank of Kazakhstan regulation, you can do AFSA, and that's a good thing. And because they're working hand to hand, right, the gap between potential explosion or let's say exploiting the situation or criminals to use that is going to be less and less. Now, Alatau, it's a not new thing. I think this is something they're going to use or complement, right? But as soon as you have too many regulators or too many expectations or wishes, there's going to be gaps, right? Because example is ADGM, they will allow you off-ramp, while VARA will allow you on-ramp, right? So that means you can on-ramp the money, but you cannot cash out, and you go to ADGM and you cash out there, right? So let's say the case, you can try to hide the money. So who is responsible? Is it VARA responsible or is it ADGM? So that's the part which it's the problem in one country. Now imagine it magnitude of the whole world, right? Taking money from Kazakhstan to Montenegro and to US, right? Who is responsible to regulate, which regulation you apply, which law enforcement is included, and all these things. And this is, I think, the biggest gap in all is interconnectivity or just sharing the information between each other in order to be more successful.
I think that we had like some standards that we can use, right? Like what I heard also at the beginning is that here they have like gold plate, like FATF and some IOSCO standards. That's why the ranking so high, but that might not be the case in other jurisdictions. I like the cooperation, and I will turn out to you, like I was like looking at you, because we in Europe like supposed to have this cooperation among member states, but when we have seen like the actual implementation of MiCAR is like certain selective practices, let's call them like that, at the level of like the member states that have overcomplicated like MiCA implementation. So how does that work if you want to talk a little bit about that also when it comes to the impact for banks and for like particularly looking at the work that you do, Pavlina, is like this like level of like multiple interpretation of like the cooperation and like member states in Europe like make it more complicated for you, for example?
Sorry, yeah, maybe if I could just add first to something that Goran said, right? Because he mentioned about off-ramping and that how do you off-ramp, but actually when it comes to understanding what is the source of wealth, that's probably the only one topic where all the regulators are aligned. So take MASA, MAS, VARA, MiCA, or even the Genius Act, they pretty much say the same thing. That the only way to understand the transaction, so the time of off-ramping, is by understanding the source of wealth. Sorry, so I don't mean to disagree, but it's indeed something that the FATF has talked about for many years, the origin of wealth. And then back to your question, Mariana, right? In terms of the implementation of MiCA when it comes to source of wealth specifically in Europe, so at the moment, this is actually done well by financial institutions manually. It's a very cumbersome process because, as we discussed, it really requires the processing of fragmented data from many different places that is outside of the traditional financial institutions. So it's a manual, cumbersome process, but it is there because banks have done this for hundreds of years, right? Understanding what is the origin of wealth, whether it's fiat or now crypto. Now, with crypto exchanges, it's actually a very, very different story because even though MiCA's grandfathering periods are ending now very soon in Europe, we're seeing that crypto exchanges really lack understanding the main processes that financial institutions have been equipped to implement for many, many years. So there is definitely a lack of knowledge and awareness there. In terms of what are the practical implementation steps when it comes to whether it's enhanced due diligence or source of wealth. At least that's what we see in our experience.
But I will argue that they have better tools, and I'm going to turn with that comment directly to you, because the tools that we have due to the technology that we use, banks do not. And I will argue that it's much easier to track source of wealth and track the path of the funds with our technology that with traditional 100-year-old school banking compliance processes. So if you can actually like bring us a little bit of light and put like an example where you have seen like the actual use like these technologies and analytics to just like fight this type of scam, frauds and financial crime will be great.
Sure, for sure. Yeah, that's working right now. Yeah, for sure. This is a highly important point that, as you mentioned, that one, it's a kind of transition in the financial world. What I'm trying to say, from the traditional finance to blockchain and the crypto economy and the crypto assets. Related to the previous or the traditional finance and the banking system, also the compliance and that kind of analytic tools are always very important. But the concept or the thing is running the whole this stuff mostly reactively. If something happens, then you are taking the cases and investigating after something happening. And just you are running a limited of data and the sources. But right now, it's fully changed because of the nature of blockchain. You need to run the compliance, you need to run the investigations and the monitoring proactively. That's the key factor. What we are doing within these platforms and the blockchain analytic tools, this is proactively monitoring what's going on, continuous monitoring that we are saying. It's a part of KYT, then a part of the investigations and other things. This is what we are, at the moment, the main topic is fraud and scams. For that reason, I would like to give some live examples related to those. For instance, for how we are just getting and addressing the scams or the frauds. The first of all, running through an algorithm, and we are clustering the entities and the whole transactions. Then we are classifying. For instance, we are classifying some entities or some transactions like money laundering, like terrorism financing, like scams, like ransomware, and etc. The main point is the whole these things is for the illicit activities. I would like to also share some figures. For instance, right now the crypto economy, the value is around 4 trillion US dollar. It's a huge amount of money. And guess what is the illicit activities in this amount in crypto business? Any guess? No. Let me share. For 150 billion US dollar. The percentage could be less, but at the end we are talking about 150 billion US dollar amount in illicit activities. It's a huge amount of money. The one thing is related to fraud. The last year in 2025, the scams amount is around 14 billion US dollar. As you know, scams sometimes just appearing after a while. For that reason, that could be 17 billion US dollar within the whole these illicit activities. It's the all-time high at the moment for these scam activities. The good thing is, with these blockchain analytic tools, as a nature of the transparency of blockchain, you can monitor and trace the whole the movement, whole the transactions within this cycle. After the scams, then the scammers, and you can follow and trace who are the scammers, who are the wallets, and etc. Just one important thing is AI. AI is changing everything. It's a very helpful tool for scammers, and because of AI tools at the moment, the revenue is almost after AI, using AI with the scammers, 4.5 higher than before. And daily transactions, daily attacks, 9 times higher than before. So on also for prevention systems within these blockchain analytics tools as well, also you need to use AI. That's also what we are doing at the moment.
You are like focusing mostly on like scams, and I would like to just like go back to you and talk a little bit more of frauds. Like, is the same pattern that we are seeing when we talk about scams? Or like, is there any different type of analytics that we use when we are like looking for fraud rather than from like these direct scams that were described right now?
Well, I think right now they're both somehow both all-time high, right? And the scams and the frauds are being used, everywhere, right? So the scams are being more used on the consumer side or individuals, but the frauds are more on the institutional or the companies, right? It depends of, again, region, it depends of, the situation and everything. But we are seeing that the scams are like pig butchering, love romance, or whatever you want to call it, right? They're being used on the people, right? While the frauds are actually being, I wouldn't say even frauds, but more exploitation of the technology, right? As colleague mentioned, AI. You can actually go and AI can help you find vulnerability and actually take the money. So I think one of the last topics that everybody's talking about is the ZK cache, right? Everybody found out that the AI found the vulnerability, how you can mint unlimited number of tokens, right? And it was supposed to be privacy coin, right? So that depends of the situation. But overall, criminals don't choose what they do. They just do it. Whatever it's easier to do it, they will just do it. And they will cash out whatever is the regulation as less applicable or whatever it's easier to do it.
With this, I also want to turn more into market manipulation, because I think that market manipulation is a little bit more elaborate. It's not just doing for doing, but like if we consider, because you were like dropping a lot of numbers, and like I mean, I'm a lawyer, and every time that I hear these numbers, I'm just like trying to put them in context, and I was just like looking like, or like thinking in like, yeah, those numbers sounds big, but they're not as big as the market for securities, or they're not as big as the market for bonds. And when you have like players like Tesos, that are like, I think upon the 10 holders of US Treasury bonds, like they have a lot of power on their treasures, right? So for a player like this, like it should be rather easy to pump and dump, or to just like actually like generate like activities that we will see in the market manipulation area. So what is your sentiment there when we have like such a big treasures at the level of like the foundations as well?
So, given that we are still talking about the technology, I'm afraid what I'm going to say something that will get me kicked out from all of the future panels like this one. Because if you are a practitioner, right, if you're not one of the vendors, then technology should not be your #1 priority. Because think about this. Remember when we mentioned before about the data, right? It's very challenging. It's easy to find a good vendor. It's easy to find algo that works for you. Easy, I'm using relative terms. But it's much more important for you to spend time and focus on the cleanliness, correctness, and completeness of the data, because at the end of the day, we can be successful only if we work with clean data. Right? Somebody mentioned before, I think it translates in all languages, garbage in and garbage out. And then the second part, going back to the regulation questions that we had before, so regulations are trying to be very, very clear on the requirements and expectations from the technology. They don't mention expectations from the analysts who are working with those technologies. So all I'm trying to say, I know that we're probably close to wrapping up, but all I'm trying to say that as a practitioner, think about this, right? To have simple, clean algos working with clean data and coupled with knowledgeable investigators will always trump complicated algos that sit on top of a dirty data, and working with analysts who really do not have experience going and challenging the situation. Mariana, you also tried to contrast and compare difference between, for example, transaction monitoring and trade surveillance. And that's also very important, because quite often when we work with surveillance departments in the exchanges, in many instances they are staffed by folks who are coming from traditional KYC AML background, because KYC AML has been out there for forever. And it takes us time to work with them to start changing their mentality, because sometimes we're positioning it as hunting versus gathering, right? When transaction monitoring, and again, and I'm not trying to oversimplify it, but it's you either on OFAC list or not. You're either subject to action, subject to sanctions, or you're not, right? With trade surveillance, it's very different, right? Just trade on its own doesn't tell you anything. You go to market makers, you challenge them, and you answer that you will receive that they're making the market. You go to traders, and the answer that you will receive is that they're hedging, right? So it's very important to start building the history and know exactly the attributes of the product, attributes of the client, patterns of the trades. So that goes back to hunting versus gathering again. Sometimes we use KYC and market and trade surveillance within, commingle them together. Just keep in mind, it's not only difference in algos, it's also difference in interpretation and the human element of the surveillance.
I want to maybe play something here, like this that sounds a little bit like police work, right? Like we are following trades, we are trying to identify them, like, right? Like it looks like police. So one thing that I would like to recommend to the regulator here is that like this police job is actually not intuitively for the industry. This should be also something that the authorities at the national level are able to do. They need to start learning how to use these different technologies that we have available that will make this possible, to identify the patterns, like identify the people behind the wallets and the transactions, and follow the path. Because if you leave this in the industry, the duty on the industry is present the report. What happened after the report is on the authorities. So they invest a lot of money and a lot of resources on compliance and training teams, But if the authorities also don't have the capabilities in-house to follow those reports, we are not doing basically nothing. So that's like something that I wanted to echo, because like I have seen it in a lot of jurisdictions without pointing fingers, but I think that that's one of the biggest gaps that is exploited, and the reason why we continue having like these numbers growing and growing is because we have the information on where they are, but there's no consequences, because there's no capacity at the police and the supervisor authorities to follow through those reports. With that really strong statement, I would like to invite you to maybe share it a little bit, and I know that this was not on the script and I'm playing around, so just entertain me. If you have seen actually reports that like, or like have like a good lesson learned from different authorities on how to power the teams at the authorities and the compliance level. If you work, I'm sure that you all work with them. So what is like the best practices that they can start implementing from early stage in like fast-growing markets to do not pile up reports that are never followed through? Who wants to go first?
Well, I'll just say one word. It's training, right? You just have to train. You have to allocate the money to train the people. If you feel they're going to learn on YouTube or they're going to learn through the courses, it's only one thing, right? They need to have experience. It's like driving a car. I can give you a driving license. I can tell you where you can drive and not drive. But if I don't give you the car to drive it, and if I don't give you petrol to drive it, and if I don't coach you in the beginning just to make sure you don't hit, it's going to fail, right? So I would say one word, training, and get the education out, and then whatever else, it's just going to come natural.
This is data, tools, and etc. are there. For all them, it's not possible to do anything without people. So on, totally right, the competency of the people, even at the exchange or the banks or the service provider side, or even at the regulatory part. The most important thing is the competency. And the other one is, as much as possible, name the people who is responsible for, if there will be any case, if there will be any fraud, scam, or any other incident, and etc. Who will be responsible from the service provider? Name it, the compliance teams, and etc. And also name the people at the law enforcement and the regulatory bodies. If there will be some case, need to work very closely and in collaboration. The reason is time is highly sensitive in crypto market. That's the point. And as much as possible, run tabletop exercises. What will happen if something happens? For that reason, it's important for a safe and secure crypto market and environment.
We are very fortunate to work with quite a few regulators, right? So ESMA, VARA, SEC, New York DFS, and so forth. So without naming specific names, what we found works well for the regulators when they take this approach of walk before you run, if that makes sense. So the initial focus is really not on the alert creation, but really understanding the market participants and spending time and spending effort on understanding what baseline, right? What is the baseline? Because by and large, our monitoring is, is variation from the baseline. When you think about the young markets, we already discussed the challenges with the liquidity. By nature, the trading will be choppy. You will have choppy volumes, you will have choppy prices. If you start creating alerts on day one, you'll be buried in false positives. Take a breather, take a step, start collecting data, start figuring out what's your average daily volume, start figuring out who are your market makers, who are your broker dealers, what is the behavior of the exchanges. Because think about it, right? The risk attribute of exchange will be quite different from the risk attribute of the market maker, quite different from the risk attribute of the broker dealer. You cannot treat all of them the same as the regulator from the surveillance perspective. So take your time, build the baseline, understand the behavior, start running alerts, and then go through the calibration.
Sure, I'll just take 1 minute just to build upon what Igor said. So start with clean data, and what we've seen really worked with regulators was more on the standardization side. So the baseline is clean data, but then also build or offer, provide them with something that they could easily read and understand. The data is already very, very fragmented, and that's the one thing that could help them process any type of output a lot faster and understand it better.
Okay, so if I read it correctly, like basically what we need to do is work with you guys to get the data, clean the data, and have like all digestible for us, but at the same time, train the teams to know what to do with the data, what they receive, and like build the capabilities on site. I will also argue that we need to train and educate the day-to-day users, because I think that like fraud, market manipulation, I will put aside, but like frauds and scams normally go via uneducated users that are starting to test with the technology, and then they have a bad experience. And the sad part is that once someone has a bad experience, they most likely will never come back. And then we will not get the level of adoption that we want. Do you want to have like some final words?
Just one word, training users, also training regulators.
Yeah, well, we will educate them. Yeah, true. But I will actually like invite like you here on the industry, you have a really open regulator that is like really willing to incorporate this on the traditional economy, right? So like I was like talking, like they were talking about like tokenized securities and like getting into capital markets, and that was really exciting because that means that they are open to also like try new things and not work so much with the legacy system and like the traditional compliance, but explore like new options. And I heard also identities, which for me are like the cornerstone of everything we wanted to do when it comes to DLT. So if you have like the ideas, that is just like already game changing for like all of these cases, right? It's like easy to track and connect. So I will invite you to just like keep like the dialogue open with the regulator, work with these guys, let us know. Like I would love to just like bring one of the regulators from here to just like talk in other regions, so see if the other ones also change their mind. But I don't have that much time for jokes, so who wants to make a question? We have one question there.
Thank you so much to all of you. Question to Igor. I'm Jandos from the National Bank. Quick question more on the concept. So the ultimate goal, the ultimate outcome of all the market transactions is price. And as you mentioned, it can be impacted by fraud, whatever. So there are two camps of people who think that, for example, if we take the centralized exchange, that the price should never be constrained. For example, the price should be freely formed, whatever. Or the second comes that the centralized exchange themselves should be regulated. So there should be some rules which would prevent financial manipulation. So I'm just wondering, from your experience, what camp are you? Thank you.
Mm-hmm. So let me try to give you a two-part answer. The first part is think about the young markets. Because of the nature of trading activity, sometimes it's very hard to differentiate between the price discovery and price manipulation. Just because, right? Just how it is, right? Because of the patterns of the behavior and patterns of the participants. You might end up with top 10 participants. Top 10 heavy participants will be, might be 90% of the trading volume. I will try to stay away from the question of philosophy of the level of control over the exchanges. I would probably, by my nature, more on the market side, let the market set the price. However, there should be controls in place to prevent market manipulation, to prevent price manipulation. So examples that I was giving earlier, wash trades, right? Wash trades, right? That's a perfect example when it's very hard to figure out the market price just looking at the volumes. We were recently doing investigation for one of the exchanges, and for a specific token, it was very interesting trading pattern. There was a very significant volume for a low liquidity token. And then what we found out that you look at the data and it shows you that 98% of the transactions were done between two market makers. There was like one random dude placed a trade, so that's how it wasn't 100. So when you talk to them, we were making market. Well, like, what type of market are you making if you're trading between the two of you, right? What type of price discovery is going to happen? So I think to give you a full, complete answer, preference is for the market to set the price, but the exchange should have strong controls in place to prevent market manipulation.
but that's after, right? Like there's no way that you can prevent it, if I understood that correctly.
Well, sunlight, sunlight cures many diseases. When folks know that they're being watched, and once regulators go and talk to market makers a couple of times, there's expectations that behavior of market makers changes.
Yeah. More questions? Did I answer your question? Yeah. Does anyone has any extra question? No? Well, with that, then thank you very much, and thank you everyone.